This is the MTPredictor weekly update for June 10th. So I've got the S&P daily. This is the new current contract here for September. Again, just going to point out the major top that we had, that we were expecting a correction off of, and then expecting a rally, expecting new highs based on, because at the time our weekly STF was showing strength to the upside. And as I pointed out the last couple of weeks, we did get new highs in the Dow, but the S&P failed to make a new high that same day or the same week, and as a result, it set up what we call our Holy Grail trade, set up to the short side, because when that new high failed here, this ended up being wave 2. So this was a significant high from the weekly chart, a resistance area that we had in place for a while. Once the market came up in there, we were expecting this impulse move away, potential wave 1. This became wave 2, and we projected, or I projected, wave 3 down. That's why I told you expect 1300 in the S&P, that was potentially in the cards because of this pattern. And of course, I projected that down, and this is the typical wave 3 target, and that's why we looked at that as a target for this potential down move. Well, it happened. We then projected up wave 4, because I told you from here the market should rally into the MTPredictor wave 4 resistance area. All right, so we came up into that area, rolled over, we projected wave 5 down. Again, using the tools and the software, this is all done in advance, as you were watching in the weekly market updates if you're a subscriber. And I pointed out the minimum wave 5 support. I expected us to at least reach that area. Well, we did. We got a major buy signal here, a high volume spike, telling us that professional buyers may be stepping in here as well. And then I told you the correction typically will be back to the wave 4 DP. After a 5-wave pattern down, we get a correction into this area. This area will be significant, because if we call it decision point, is if this area holds as resistance, then the trend which was down prior should continue down. If, however, they take this area out, that's around the we'll call it 1337 to 1350 area. If they take that out to the upside, then I expect this whole 5-wave pattern down will get erased to the upside. And we can actually take a decision point off the top of wave 1 here. Let's see, did I take that out? And it's projected over here now. Let me just get rid of this. That's from the weekly chart. But this is the area then that could potentially, if they take this area out, this would be the next major resistance that we'd be looking at. Upper, starting around 1430, 1432 area. Right, but this is what we've got to deal with here. Now, I don't have it open yet today, but let's look at the Nasdaq, because the Nasdaq has basically the same pattern here. So let's just pull that down. Obviously these markets are correlated, and if I put the Elliott waves on here, you see the same pattern unfolded. That 5-wave pattern down here with a decision point buy signal. Now you see the market has opened here this evening with the gap up on the I guess the news on Spain, and they're basically going to work that out. They're going to get bailed out. And so here's the rally into this decision point area in the NQ. Right, and if we put the analysis on that trade setup, the software knows that the target is the wave 4 DP. All right, so that has already played out in the NQ. I expect the S&P also will have a gap up for Monday as a result of that news from overseas. So anyway, that pattern is complete as far as this correction off the wave 5 target area. And now we'll see, this is an important area. If it gets taken out to the upside, we could get more rally. It's an options expiration week. It's actually quadruple witching. So the tendency is about 70% of the time the market will rally into options expiration. It didn't last options expiration. I don't believe we did get a rally last options expiration, but we certainly could this week. and we'll see if they take this area out. Then, like I said, we can take a DP off the top of wave 1 here in the NQ as well. It would put us up around that's around the 28.30 area in the NQ in the current contract. So we'll see how these plays out. Again, if this decision point area holds as resistance, then I expect that the trend, which was down prior, will continue. So areas to watch. It's kind of critical areas to watch here. Here now is the Euro US dollar, and I told you last week we had come into some major support in the euro here. There was also a decision point buy signal that had you in the end of last week. Here's our open now in the Euro US dollar trading at 26.40, and you see the target there, basically another decision point off the prior wave high, and similar 5-wave pattern down there. So this pattern should be looking familiar. We're just looking for a correction now back to this wave 4 DP in the euro, and what that will do then potentially now to the dollar, if I've got my dollar index here. Again, this is a pattern here on the weekly dollar chart with the major decision point bottom there. You can see the nice high volume spike that came in, so it told us professionals were stepping in. And I remember, as I've told you before, Jim Rogers saying he was a buyer down here, just because everybody was so pessimistic on the dollar. He's not the greatest market timer in the world, but obviously he did a good job on that particular trade. But anyway, here was the last, MTPredictor caught that as well, but here was the last swing into this major low. And so we'll take a decision point off of that, and that puts us in this area. And eventually, I think because the euro is rallying, the dollar is going to pull back. But I think eventually, and I've been saying this for quite a while now, all this time that has gone by, I've been expecting the dollar to get back into this area, which is what, the 85.50 area, somewhere in there, 85.20, 85.50 area. And then let's just take a look at gold here on the weekly chart. Again, some nice buy setups here. The last one here on the weekly contract. Again, this one, the entry here hit the 100% initial risk line if you're long that, and stopped at break even. But you see the target there. We'll see if this area holds. We can take a decision point off of this for your next major support there, right at 1500 in gold. Again, this is all. If we just put the, let's just put the 50 period on this weekly chart here. Let's just add that quickly. So you can see when we've gotten below the weekly 50 period, these have been major buy signals in gold over the last decade. I have to put more data on this particular chart here, but and I've shown this over and over again, but when gold is in this bull market, which it's been in the last 10 years, anytime we've dipped below the weekly 50 period, it's been a very good buying opportunity. Again, this was the crash of 08 in the stock market. Got a major buy signal there below the 50 period, and it was above the 200 period. And anytime we get that pattern, again going back to basically 2001, 2002, it's been a very good buying opportunity. So that's basically what we have here. We have I know a lot of professional buyers of gold coming in these areas, again below that weekly 50 period. So we'll have to see, because when we look at silver, the potential for silver is a little different because of the pattern that formed here. Because this was a major top, wave 5 top here in silver, which was a recent testing a recent being back in the 80s, not all-time high, recent high in silver. Again, if we adjust for inflation, all-time high in silver was probably somewhere around $1,500 an ounce. So we're not even close to all-time highs, just close to that 1980s high in silver. So just a little perspective, and coincidentally or not, when we had basically $1,500 silver was back, I think, in the 1300s, and Europe was going through a banking crisis. Anyway, because of this major five-wave pattern up here, this could potentially have been wave 1 into wave 2, and as I showed you before, we could project wave 3 down. Again, which would put us down around $15 silver. It's a potential. I don't put a lot of weight in it. I put much more weight on the gold chart and less weight on this because it's a more manipulated market. It's a smaller market and so forth, more easily pushed around. But it's out there, so I just point it out. Anyway, you can see the new buy set up there in silver that was just taken in. You see the target there at 36.38. Basically, we'll see how that plays out. A little ABC pattern there. And I think we'll leave it there. Again, the economic data this week really doesn't crank up until Wednesday with your PPI and retail sales. And Thursday you've got jobless claims, of course, and I think consumer sentiment on Friday. It is options expiration week again, so it can get tricky, especially the closer we get to Friday. It's quadruple witching. It may be a day that you just stay out. We'll see how Friday plays out, and we'll see if we continue to rally into our decision point off the wave 4 areas there on the daily charts in the S&P. That's already been hit now in the NQ. So we'll see, watch those areas. Market needs to make a decision there. And then the next Fed meeting, I think, is the 20th of June. So it's right around the corner. And Fed may be breathing a little easier because of the stuff that's worked out overseas. And that's why we're getting this rally here. Or at least that's what the talking heads are blaming the rally on. So anyway, we'll pick things back up next week. Wish you a good trading week and see you back next Sunday evening.